Today's podcast episode is all about Bitcoin and its potential to revolutionize the financial landscape. Our guest, Michael Saylor, co-founder and executive chairman of MicroStrategy, shares his insights on Bitcoin ETFs and their impact on institutional capital flow into the Bitcoin ecosystem. Bitcoin, as many of you may know, is a decentralized digital currency that was created in 2009. It operates on a technology called blockchain, which is a distributed ledger that records all Bitcoin transactions. Unlike traditional currencies issued by central banks, Bitcoin is not controlled by any government or financial institution. In recent years, Bitcoin has gained significant attention and popularity, not only as a digital currency, but also as a store of value and an investment asset. Its price has experienced tremendous volatility, with significant price fluctuations over short periods of time. However, many investors and financial experts see Bitcoin as a viable alternative to traditional investment vehicles like gold, real estate, and even stock market indices. One of the key factors driving Bitcoin's adoption is the introduction of Bitcoin exchange-traded funds, ETFs. ETFs are investment funds that are traded on stock exchanges, and they allow investors to gain exposure to Bitcoin without actually owning the underlying asset. These ETFs create a new gateway for institutional capital to flow into the Bitcoin ecosystem, potentially revolutionizing traditional finance. Saylor explains that ETFs are just one application of the Bitcoin standard. Companies like MicroStrategy, Cash App, Strike, and crypto exchanges like Coinbase and Binance are also applications of the Bitcoin ecosystem. As more applications are developed, such as integrating Bitcoin into mutual funds, pension funds, and insurance plans, the demand for Bitcoin will continue to grow. The significance of Bitcoin ETFs lies in their ability to solve several challenges that have held back widespread Bitcoin integration. One of these challenges is compliance. Institutional investors, such as pension funds and hedge funds, often have strict regulations and charters that prohibit them from directly investing in Bitcoin. However, with the introduction of Bitcoin ETFs, these institutional investors can now gain exposure to Bitcoin without violating their compliance rules. Another challenge is custody. Bitcoin ETFs enable investors to buy Bitcoin through regulated banks in different countries. For example, an ETF in Hong Kong allows investors to buy Bitcoin that is custodied in a regulated bank in Hong Kong. This solves the problem of credit access, compliance, accounting, and reporting. Saylor predicts that we will see a spread of Bitcoin ETFs in different countries around the world. Each country may have its own ETF, with Bitcoin custody in a regulated bank within that country. This localization of Bitcoin ETFs enables investors to invest in Bitcoin while complying with their respective countries' regulations and capital controls. The introduction of Bitcoin ETFs also addresses the issue of price fluctuations caused by large Bitcoin purchases. When countries like China buy billions of dollars worth of Bitcoin, it drives up the price of Bitcoin in other countries like the United States. Bitcoin's adoption has been hindered by a misunderstanding of its true nature. Many people see it as a cryptocurrency and immediately think of it as a currency and a medium of exchange. However, Saylor argues that Bitcoin should be seen as digital capital, similar to property or assets like gold. By reframing the narrative around Bitcoin as digital property, its role as a store of value becomes more apparent. Saylor highlights the advantages of Bitcoin as digital capital. It is a global asset that can be easily transferred and accessed by anyone with an internet connection, regardless of their location or financial status. This makes it an attractive investment option for individuals and businesses alike, especially in countries with unstable fiat currencies. In conclusion, introduction of Bitcoin ETFs has created new opportunities for institutional capital to flow into the Bitcoin ecosystem. These ETFs address compliance and custody challenges, making it easier for institutional investors to invest in Bitcoin. As Bitcoin continues to gain acceptance as a store of value and an investment asset, its adoption is expected to accelerate across various sectors of the economy. So, what do you think about the introduction of Bitcoin ETFs? How do you think it will affect Bitcoin's adoption and price in the long term? Let us know your thoughts in the comments below. Thank you for tuning in to today's podcast episode. If you enjoyed this discussion, Please subscribe, like, and share our video for more engaging content on decentralized technologies and Bitcoin's evolving role in the global financial system.